Lender is vulnerable to the risk. So the basically, in this case, Deutsche Bank has a limit on this. Now, money market transactions are happen between these limits. So money market borrowing. Only within the limit they can play. What do you mean by the other one? Repo. So the repo is secured like central bank, like you borrow from the central bank, you borrow from other banks under repo, meaning you are allocating government securities to for this borrowing. Only thing is, only the advantage is now in this, you can borrow from the interbank lower than the central bank rate. When central bank capital lend කරන්න කියන හයට නම් you can borrow from the interbank at 5.5 or 5.8 වගේ. සාමාන්‍ය අඩුවෙන් තමයි interbank එකේ අපිට හම්බෙන්නේ. So basically you go first interbank, failing which only you go to central bank. Central bank is giving at 6% anyway. By interbank, other banks, excess bank will give you lesser than that. In high of course, what's the point of going to borrow from other banks? You go to central bank. Obviously, other banks will lend you lower than the central bank. So that's why the interbank transaction happens. That's interbank money market, interbank borrowing, interbank lending, interbank market. Okay. So that is also another thing. Just keep in mind. And if you don't have security, then you go to central bank. Ask at 9% virtually usually it's 10%. That's the recent development. Day before yesterday we had central bank. Keep in mind and impact only, right? Monetary policy. Now every month you have monetary policy, right? Meeting. So every month you have monetary policy meeting. Now the August one. So we have September, October, November, December also, right? So that they can change, they can take decisions. So they can remain these rates as it is, they can reduce, they can increase. That is there. Here they have decided to increase. Okay, that's that. And another thing I just want to give you, another recent development is what is this one. I think you can read it, but just read it. DEP to go live on CSE from today. That was from Monday, last month, right? This is the date, 26, scheduled to go live, but it was postponed with the stock market. They actually went on it. So what do you mean by this DVP? So basically DVP, RVP, delivery versus payment, receive versus payment. These are the two words we are using in the bond market. When your bank invest, when your bank purchase treasury bond from another bank, another primary dealer, you get the security once you make the settlement. Now, before we have this facility in the share market, if you have share market investors, if you have invested in the share market, and if you have if you have sold your stocks. Now say today you sell shares. You have shares, you are earning profit, then today you decided to sell. You get money T+3. That's what actually the transaction date taken to the afternoon, you get money. But what happens? Now say you had don't kill shares, you sold it today. Don't kill shares or the portfolio immediately I want to sell. don't get money. But you don't get money. Who is having risk? Is there any risk? Of course. You don't have security. You don't have your asset, which is the investment in your own fields. Thus, you don't get money. Since you have sold it, you are helpless. Something goes wrong. මොනවයි බඩු විකුණනවා. පල්ලි දෙන්නම් කියලා කියනවා. That's a risk. But only thing what we can say is there has been no default like right. එහෙම default එකක් කවදාවත් වෙලා නැහැ. Sometimes මිනිස්සු සල්ලි ගෙවන්නේ නැහැ ওই දවස් තුනකින්. සාමාන්‍යයෙන් if you work with a broker, when you purchase shares and you have to settle it T+3, but you don't pay. Sometimes what happens is you become a debtor to the seller. So basically your broker will say you make a Salidan deliver. But if you don't, sometimes there are occasions, right? We don't have sometimes money to settle it, so then of course you become a debtor. But broker company can't say that okay, my client, this client has not paid, so I can't settle it. You can't say like that. So the broker company has to settle it. Broker company has to settle it. You can create a client as a debtor, then you can charge whatever the interest from him until he pays. But you can't say that no, he has not paid, I can't settle. You can't. You have to settle it from your own money. So that's why I told you there is no any default has occurred. But to have more secure, so this system has introduced. Here only DVP, right? Delivery versus payment. There is no RVP happening in this shares, right? Only DVP. RVP receive versus payment. Only that is buy and sell. But government securities, once you sell, once you receive. So there are two types. විකුණන කෙනාගෙන් ගන්න ඕනේ හම්බෙන කෙනාට එනවා treasury bond as a security, but here only you get money, so there is no RVP involved in here, right? treasury bond only RVP involved in delivery versus payment, receive versus payment. හම්බුනාට පස්සේ තමයි ගෙවන්නේ, ඒ වගේම delivery වුණාට පස්සේ තමයි ගෙවන්නේ. Simultaneously happens in the share in the government security market, right? මොකද security එක ගන්න කෙනාට එනවා. Then here මෙයාට එන්නේ විකුණන කෙනාට security එක අයින් වෙනවා. So එයා delivery versus payment. විකුණන කෙනාට මේ share market එකේදී under this method the seller only gets what? Cash. So there is no security, right? Involved. Security goes out only, right? So delivery versus payment. You deliver your shares once you receive the payment. That's what it means. That's what it means. You deliver your security to the buyer once you receive the payment. When it happens now, it's T+3, not today. If you sell it today, you don't. After 3 months only you get money as a buyer, as a seller, as a seller. Then your security goes out on the same day. Simultaneously it happens to a system, right? This is a new method the CSE has introduced, and it's being now implemented. And there is a question on this, and it explains everything. I have taken this from a paper, newspaper, which I told you to read. So you must be having if you have read this, of course, that's why I told you to read the papers, right? I have taken this either from Daily FPO or Daily Mirror. I think I can exactly remember one of these two. So those are business pages. Now, since the papers are not printed, you can have this what you call it, soft copy as well, digital format. So just read it, download it to your mobile phone and read it. Right? There are a lot of sites you can subscribe to receive all the papers. So these papers, all these papers, you're getting now. There are WhatsApp group or something. There are, you must be having them. Subscribe to that and read it, right? These papers, right? Understand this. This is another development they have implemented. And also, as I promised, I have uploaded this as well. I'm very sorry for the inconvenience of the visibility, but this is the requirement of eligibility eligibility criteria eligibility criteria to be listed on the main board, right? I have the physical document, the hard copy with me, but only thing hard copy will not work under these circumstances. But I have taken some photo and send it to you. I will see whether I can scan it and send it to you. I will see that, right? It is not that clear, I think. So. For the reading purpose only, you keep this. These are the eligibility criteria you have to meet when you list in the main board and the result board, right? So I'll give another two MCB board then what is called Empower board, right? I will give you a short note on that as well, right? There will be a possible question on that, two boards, and these are the points, right? Right. Requirement, and there is another one called continuous listing requirement. I thought of uploading, but I thought of when we do the questions, I'll give you answer for this question. What are the continuous listing requirement? We discussed about the continuous listing requirement. What are the continuous listing requirement? Accounts දානෙට accounts දාන්න ඕනේ, partly publish දාන්න ඕනේ, director සමුනාරණ නම් you have to inform. Whatever the project you're undertaking, you have to inform everything. So we have to be transparent, and also the corporate governance policies have to be implemented. Right. And also, I have uploaded the role of the investment banking. So I have taken this from in NDB investment banking website. So these are the basically things we are learning. This is the investment banking activities. These are the things we are learning. This is your syllabus. Now see, private placement, haven't we done? We have done this. So you undertake, you mean investment banking undertakes, right? You undertake. So, sorry. You undertake. So basically your syllabus, private placement. What is the difference? What is the other one? Private placement. The opposite side is what? IPO. Initial public offering. Private placement means what? You individually go and ask. I have a share issue. Would you like to invest? Private placement. Nobody knows. IPO. You are inviting public to invest. Right issue. We have discussed. Only thing I have to take some questions with you. I'll be taking next week, right? With the questions. There are questions, and the latest paper 2021 January you had the exam, and there was a question on this right issue as well. I'll be taking next question. There are a few questions on right issue, very easy. 5 marks you can easily. Right issue is what? You are inviting existing shareholders to invest in this particular company, existing company, at a discounted price. Under what you are calling this preemptive rights. Remember that the rights we have discussed. Now remember that your exam is due on October. If I'm not mistaken, they have advanced it to October, right? I don't know whether under this situation whether they have extension or not, but please be ready to face to sit for the exam by end of October. Then please recheck if there are any changes to the center IBSL, right? So then we'll have to keep in mind these things, right? Sometimes since we take additional classes, you might be not able to have more time for you to read, to grasp. If you can understand once we do this, that will be a great helpful to you. If you are not doing you are not doing this subject only. You have to do other subjects as well. So try to do this and don't keep it, don't postpone it, right? Exams are going to be easy one. The 2021 January exam paper is quite easy. 82% pass rate, right? So basically, you can pass this exam these days. So the examiners also know the difficulties you face. Now understand this situation. Now, online teaching, online learning is not going to worthwhile. So what to do? But only we will have to do that, right? So very difficult to learn, very difficult to teach as well. So I can't see your movement, right? I can't understand whether you have understood or not. So then just by looking at your eyes, I can tell you whether you have understood or not. Then I can basically redo it. But only thing is I am not getting feedback. It's very, there is no two-way communication under this. But what to do? Right? We'll have to adjust it. But only positive side is you can later watch this video. So then following day, the next week, you can ask any question if you have. So that advantage is there for you, right? So now see right issue, existing shareholders at a discount price. So we remember that we have discussed the action you can take when you have rights, when you have entitlement. Right? Ignore it, participate it, half and half sell it. Oh. And preference shares, now you know what preference share is. Similar to share, but different to ordinary share. Like borrowers. They are not true owners. If you are invested in preference shares, you are not a true owner. You are a true owner. Okay. Preference shares are the shares, another type of shares. Ordinary shares, okay, another type of share. Mandatory voluntary offer, I think there's a there's a down. They explain what mandatory offer is. So basically, you know now you will be learning under mergers and acquisition as well. When you purchase, when you buy, when you invest in a company, more than the 30% of shares. Now say you have invested in John Keel's example. You have acquired number of shares, 30% of their issued capital, more than 30%. Once you purchase 30% of a share, do you get a controlling stake? So we'll be coming later, there's another topic, but since we have slightly discussed, do you get a controlling? No. If you have more than 51%, then you get. So 30%, but we discussed 20% if you are having to become associate. So we'll be coming later. There's a significant influence. Now see, if you are having a 30% in a particular company, so there is a mandatory offer has to be given. Mandatory offer means what? You have to give mandatory offer for existing shareholders, other shareholders. Mandatory offer for existing shareholders. Okay, I would like to purchase, you as a buyer, I would like to purchase your shares if you're giving me this. Now see, preference shares, mandatory voluntary shares, listed equity placement also similar. Now see, now somebody wants to issue shares, So that this company, private company comes and asks you, this particular company comes and asks you, okay, I need to issue shares, please help me. You are doing, you are undertaking that. You are undertaking that, right? Securitization, you have separate topics, we'll be learning later. Loan syndication, I'll be giving a note on that. Debenture, you know what debenture is now. Commercial papers also the similar one are money market instrument. There is a note I'll giving. SOPs, we will be discussing under foreign exchange. Sharia compliance product we will be not discussing. And mergers and acquisition, diagnosis studies, this is due diligence test. Corporate restructuring, there is a topic. ESOP, employee share option, project development, project management is the next topic. So basically, you are learning, you are doing these investment banking activities. Now I have given some special notes as well, and this has not been tested. So what unit trust is, just go through this, right? That's important for your reading purpose, right? And also I have uploaded some. You will be receiving this. So here there are 5 topics covered: asset management, wealth management, underwriting, financial brokering, and so the only the literal meaning. Examiner can test you only the literal meaning. Asset management, wealth management, two different things. Only thing the scope is different. Underwriting we have discussed what anything unsubscribed shares you will be subscribing. Financial brokering, if you want to invest in a shares, you first meet broker. That is their broker. Investment research means if you contact with if you have open account with them, they will be sending research report on companies. Only the literal meaning. So there are a lot of questions on this. So they basically only literal meaning only examiner can test. So we'll be taking that, right? Just want to tell you. And so basically, that's what we have. I just recent development is that only thing we were expecting to do this under the bond calculation, clear price, dirty price, and the right issue price. I'll be taking next week with you all. And also, I have uploaded. I think you must have seen this. I have uploaded some questions for you to refresh what we have done so far. Please try whether you can do these questions. So then only thing we have done, and there are questions. The answers are available in the tube as well. There are some new questions as well. We will do this. Right. So basically, those are the only missing part I need to discuss with you. This part, and this is the 4 things you have to do. Under right issue, we'll have to do this. I will come to that one. So basically, when you issue rights, you are doing it under preemptive rights, right? That's important thing. The examiner has not tested. They have tested the rights question, right issue question, but these rights of ordinary shareholders or the equity shareholders have been not tested. So that is important one. And one thing is I want to discuss with you. This one also is very important for you. Systematic risk and unsystematic, we have done this, and there's a question on this. Do this. That also I will be taking with you next week, and this part. Now, Now, basically, there are two types. We remember that we discussed under treasury bond. You must have seen that treasury bond. There is a required rate of return. Required rate of return. The questions. There are two questions we did it. Required rate of return means what? The expected rate by the investor. If you want to purchase this particular asset, this is what I expect. So, if it is an individual, you can decide on your own. How do you decide it? මම මේ බොන්ඩ් එකේ ඉන්වෙස්ට් කරනවද වඩා මට මේ FD එක දැම්මම I can earn 10%. So I am expecting 12% from this. Like that. There is no ground, there is no logic for individual to decide. Individual to decide. But if you take an institution, if you take a company also can invest in bonds. Company also can invest in shares. There is no restriction. Can do that. But if a company decides to invest in government securities, treasury bill or treasury bond or dividend, can they do like that? They can't. This is very important point. Examiner frequently tests capital asset pricing model, which is more relevant to the next topic of project appraisal. But project appraisal, once you have a base for this, once you have learned this, if you learn this before we go to project appraisal, much easier. So how do you decide? It's basically capital asset pricing model. So capital asset pricing model, only thing you just keep in mind the variables here. Here risk-free rate. What do you mean by risk-free rate? Treasury bill or treasury bond rate. Examiner has to give you that rate for you to calculate. Beta also has to be given. Beta is what? Beta measures the systematic risk. Systematic risk is measured by beta. Systematic risk means what? Risk which cannot be avoided. Which cannot be avoided. මොනවා හරි එකක risk එකක් තියෙනවා නම් avoid කරන්න බැරි. You have to take into account. Any risk, if you can avoid it, you don't want to pay anything. Why? You should be smart enough to avoid it. ඒකට compensation ගෙවන්නේ නැහැ කවුරු. Unsystematic risk which can be avoided by how? Through diversification. So that is your ability. You should be able to avoid, you should be able to mitigate through diversification. So then don't ask anything from me. ඒකට මගෙන් මොනවද කිසි දෙයක් ඉල්ලන්න එපා. But it is your ability to take it off. Your ability. වැඩ කරන්න බෑ කියලා මගෙන් don't ask anything more from me. But systematic, of course, common to you, common to me, can't avoid. I'll pay you something for you. Things. Beta comes into the sea. Market return. And again, risk-free rate. Risk-free rate. This has to be a minus. This figure has to be minus. Market return minus risk-free rate. lot of exams, instead of these two, they give what? Risk premium. If you are given in the exam, I'll be taking that question as well. If you are given risk premium, this is for these two. Correct me. Market take a rate take make we say 12% example. Risk free rate take a 10%. Obviously what? 2% you have to pay more for what? For the risk. Risk free rate take anything you pay more means what? Why do you pay? Now say your bank, remember that we discussed. Your bank fixed deposit you pay more than the special rate. Why do you pay more? Even you are a triple A bank, you are carrying a risk. Your bank is at risk. You don't pay entire thing. If you go back, if you default for the depositors, no, you pay only 600 for the 1 million now. They have increased 1 million under deposit insurance. So there is a risk by investing in banks, even they are rated at triple A. Your repayment abilities or the third party is guaranteeing you that your repayment ability is perfect. But we don't know, right, what will happen. So this one we expected, no, we never expected. Expected things can happen. The rating agencies are actually giving you the rating based on the today's information or the future information known to them. If something happens unknown, possible. So then, so risk premium, anything you pay more than the risk-free rate is your risk premium. So here is the same. Don't go wrong. Now in the exam, I have seen a lot of exams. They are giving, rather than giving the market return, they are giving the risk premium. So understand, right? So this is how you calculate the capital asset pricing model. So basically, you calculate what by using the capital asset pricing model is the required rate of return. For who? If it's individual එකක් පුළුවන් calculate කරන්න, but individual එකේ මෙහෙම අරගෙන calculate කරන එක there is no justification. But companies or institutions use this. Companies use this. Institutions use this. So CAPM is the method, most popular method of calculating required rate of return. Remember that. So where do you use this required rate of return? Now we have learned so far, when you want to invest in government bonds or debentures, remember that the discounting factor. Here the discounting factor. This is how you calculate. Now when you do this project appraisal, discounting factor you are discounting. Same thing you do. 5-year project, you bring it to today's terms. What's the rate you are using? Discounting factor. How do you find the discounting factor? This is one of the methods. This is the most popular method. There are many methods we'll be learning under this project appraisal topic, dividend method. But this is the very most popular method. Understand this, right? Before we go to next. So capital asset pricing model. Here it is our market return of market yield and the risk-free rate, market risk premium. The examiners are giving this only rather than giving market return. Okay. Only thing you have to change it. This is RM minus return on market minus. I have put here plus, right? It's wrong, right? Minus CAPM, capital asset pricing model. Capital asset pricing model. Okay. This is an application for this is application for you to calculate. So, I have discussed this rehearsal paper also. And yield curve also we discussed last week, right? Only thing I will show it to you, I will show it to you next week. Since, now see this one, just now we discussed the when you are having this press conference, press release and treasury bill and the inflation. This is the classic example which I explained to you. See, treasury bill rate comes after adjustment of inflation. Now treasury bill rate එක 5.32 කියන්නේ after adjusting whatever the inflation. There are two types of inflation in Sri Lanka: CCPI, Colombo CCPI, Colombo Consumer Price Index, and NCPI, National Consumer Price Index. There are two. One thing is 6.1, the other one is 5.7. So both just either one, your CCPI or NCPI want to adjust to. Treasury bill yield, so that you're making a minus negative yield. So the real risk-free rate plus inflation is basically risk-free rate. Where do you get the risk-free rate? Treasury bill rate. This is the treasury bill rate. Within bracket you can say treasury bill rate. So remember that when you have a more period, we discussed last week, and you have to add this maturity risk premium as well for the tenor, for the term only, right? Remember that. And this is the question I was this one. The yield difference between the unknown. This is another question. These are things we have discussed, right? Conversion, callable option, example. This is the question. This is very important question. Examiner has not tested this. Now see, how much should an investor pay to buy 100 5-year zero coupon? Now see, zero coupon. So tell me example for zero coupon treasury bill. So treasury bill, I think we have discussed this as well. I thought I have recently, the last week when I go through some foreign textbooks, this is the question examiners have tested many times. So sometimes you get the foreign exam questions as well, right? So this is important. So recap this. We have learned treasury bill as zero coupon, but in Sri Lanka we have confined to our zero coupon bonds to 3-6-1 year. We have not touched anything other than 1 year. Now this question comes, but foreign countries, of course, yes, they have more tenors than 1 year. Now see this question and read. I have given the example as well. 5-year zero coupon debenture, if the investor requires rate of return, debenture is 20%. Required rate of return, how do you find out if it's a company? One thing is CAPM. There are many methods, dividend methods. I'll show it to you. Now you know, now you have a base now. Everything has a logic, right? Everything has a chain effect, right? In this subject, right? Open. Now this is how you calculate. 100 is the nominal value divided by 1.2 is what? 20%. You take into a percentage to the power 5. To the power 5. That is the important part. Don't go wrong. To the power 1.2 to the power 5. Right? So the answer is 40. So very important question. Examiner has not tested. I have strong feeling that there is a high possibility of testing this question. Right? Right. So basically, I'll be taking once we finish this. Once we finish this bond part, small thing, then move into project appraisal. So then basically we can We can finish it off. Basically, I'll take some classes next week. I'll let you know. Definitely, I'll be taking some classes in the night to finish it off. For this time, we are comfortably okay. I have uploaded the project appraisal to you. That is the last week. And yesterday, I have uploaded foreign exchange transaction tubes as well. I have told them to upload to you to have a look. Then we can finish it off. And this topic, there are 5 topics to be covered. That also I have uploaded. And the only thing, I'll take some questions with you, ask the questions once you finish this. So basically, if you finish this part, project appraisal and the clean price and this right issue prices, almost we have covered a lot of area we have covered. The major part we have to cover is mergers and acquisition, which is very frequently asked. That part we can cover. Okay. Any question before we wind up? Important factor is understand the impact of the rate decision they have taken. Now, most probably, if they have not taken, if they have further reduced, same impact. Example test tube, same impact will be there. Reduction, right? So then we don't have to worry about only that this impact will remain as it is. If they are doing further reduction now, every month they have policy meeting, they have September, October. So there are 2 before your exam. So same impact. So basically, since you don't have questions, we will stop from here, and we'll be taking some extra classes during next few weekdays. Right? I'll let you know in advance what are the dates we'll be taking up. So extremely sorry, as I promised last week, I wouldn't take it, but we'll be taking this week. Right? So students, thank you very much. Start studying, and if you have anything unclear, gray areas, please bring it to the class and we can discuss during next weekdays. Right? Okay. Thank you very much.